Hi, everyone, and welcome to the Southstar Battery Metals live corporate webinar. This is Will Mays with RB Milestone. Southstar is focused on the industrial minerals and battery metals for the clean energy revolution and is currently developing the Santa Cruz Graphite project in Bahia, Brazil, one of the premier battery metals jurisdictions in the world. The shares trade on the TSXV under the symbol STS and on the OTCQB under the symbol STSBF. Joining us today is the company's CEO and Director, Richard Pearce, who will be going through Southstar's investor presentation, which will include a brief overview of the current operations, upcoming operational timeline, and an overview of the recently announced financing agreement with Sprott. At the end of the presentation, we'll open it up for questions and for management to address. And if you're interested in asking questions and are logged into the Zoom app or web platform, you can submit your questions directly into the Q&A module. Please note that this presentation is being recorded today, Monday, April 11th, 2022, and will soon be made available on the company's website at southstarbatterymetals.com. Today's call may contain forward-looking statements that are subject to risks and uncertainties that may cause actual results, performance, or developments to differ materially from those contained in the statements and are not guarantees of future performance of the company. No assurance can be given that any of these events anticipated by forward-looking statements will occur, or if they do, what benefits the company will obtain from them. Also, some risks or uncertainties are out of the control of the company. Southstar has a full disclaimer contained in its presentation. Lastly, RBMG is not a registered investment advisor or broker-dealer. For more information, please visit rbmilestone.com. And now it's my pleasure to introduce Mr. Richard Pearce, Chief Executive Officer and Director of Southstar. Richard, stage is yours.
Thanks, Will. Appreciate the intro. Can everybody see the presentation okay? It's up and looks good?
Looks good.
Okay, thank you. Well, appreciate everybody's time today, and thanks for participating. Just kind of run you through the story and kind of the latest news and give you a general corporate update and kind of walk through the Sprott deal. But a couple things I always like to start off with are just highlights. We keep about 45, 50 different companies in our database that we kind of track over time. And some of the things I like to start off with are just things that are strong differentiators of Southstar compared to a lot of the other companies out there. Number one is it's a management team that has a very proven track record of taking projects from conception through to construction, production, and operations, and scaling from there. So we've done this a couple different times. Probably the most notable that a lot of us have been involved with was Trek Mining that turned in, Luna Gold that turned into Trek Mining that then turned into Equinox Gold. But we have other assets that we put into production. But in general, it's a team that's really been there, done that, earned its stripes, and I think that's a really important point as we move through the different risk factor and look to put something into production and scale it up. Phase one is fully funded now with the announcement of our deal with Sprott. We'll walk through particulars on that, but we're looking basically to start construction here over the next 45 to 60 days with phase one commercial production planned for Q2 of 2023. Again, extremely undervalued compared to a lot of our cohorts out there on any metric. And I think one of the key factors that differentiate is kind of how we're developing this project, as opposed to the philosophy of build it and they will come. We're going into this basically in a phased approach. Phase one is 5,000 ton per year comp plan, approximately $8-9 million capex. Phase two, the way it's conceived right now, is a 25,000 ton per year comp plant, about a $27 million capex. We are currently permitting phase two and phase three, so we're going up to 50,000 tons. Our plant is modular, so we're basically looking at 25,000 ton per year concentrate modules, and if we want to scale, we basically do it in 25,000 ton per module increment. And I like this approach for a couple of reasons. Obviously, number one is risk management. Has allowed us to get product into the marketplace, negotiate hard take or pay offtake agreements for fairly modest capex. So then when we look to size our phase two and our phase three, we do that with hard take or pay commercial agreements in place. The markets get a chance to get significant tonnages of our material fully tested for different applications. Graphite, different than many other Mining products is something that if you want to use it for certain applications, you have to go through a series of gates and qualification processes to get there. So it's not like you flip the switch on the plant and then suddenly you start selling to Tesla or others. So it's something that, for example, for lithium-ion batteries for EVs, it can take 2 to 3 years, depending on the material and the company. Alkaline batteries, for example, typically takes 9 to 12 months. So there's a series of steps you have to go through and gates that you have to put your product through before they actually qualify you and then start using it. So we think this is a smart approach from risk management. It allows you to basically get take or pay offtake agreements signed, which is important for industrial metals across the board. And then we look to size this thing up and scale it based on hard agreements with fixed volumes and fixed pricing. In terms of the project itself, again, it's a very robust project. It's principally, Santa Cruz is principally a large flake deposit, meaning the majority of the ore itself is 80 plus mesh material. When you're talking concentrates, basically the better the grade and the larger the flake size in your concentrate, it's just the better the pricing. So in round numbers, we're 2/3 medium and large flake and about 1/3 fines. The project in Alabama is kind of a complementary body in that it's about 2/3 fines and 1/3 medium to larger flakes. So very complementary ore bodies. In terms of geology and exploration, again, very large land package, 13 claims. We're really only playing about 5% of the overall land package. We basically have a 7.5 kilometer long strike that we've been focusing on. We have 10 to 15 drill ready targets and looking to basically expand our resources and reserves as we move through this. In terms of met and process, again, we've ran 30 tons through a full pilot plant test. Our circuit is basically very similar to other graphite mines that are currently on strike from us. In terms of value add components, we've done a variety of different testing. We've produced coated and uncoated SPG for use in lithium-ion batteries. We've gone through long cycle testing. We've tested for expandable graphites, fire retardants, dispersions, conductivity enhancement materials, et cetera. So we've done quite an extensive suite of tests for our material. It all is tested very favorably, particularly compared to a lot of the other flake graphite deposits. So we think we're in a fantastic position to be able to sell into a variety of sectors and applications and do it very profitably. A little bit about the cap table: 102.5 million shares outstanding, 156.7 fully diluted. Insiders own approximately 15%. Institutions own about 8 or 9%. So again, I think overall, directors and management are very well aligned with shareholders in general. In terms of the corporate structure, again, very simple. Southstar owns 100% of Santa Cruz. We have an earn-in in place on the Alabama project, which basically gets us to 75% of the project itself, and I'll go through that in a little bit more detail. About the leadership team and the management team, again, great group of folks that many I've worked with for over a decade. Very good capital markets experience, very good operations and production experience, as well as very good Brazil experience. Most of our executive management team is based here in Brazil, actually. So a little bit about myself: I have degrees in economics as well as in engineering. Moved to Brazil full-time in 2008. Basically, my company finds projects, stands them up, gets them through development, through construction and production, and then scales them from there. So this is something that we've done a number of times. We have IR and accounting and some finance folks in Canada, and as required, we'll be staffing folks for the Alabama project. But in general, I'll be on site 7 to 10 days out of every month. My experiences in Brazil is if you want it on time and on budget, which is the mantra that everybody is going to be singing, you have to be present and you have to be very involved. So I plan on being on site throughout construction and into commissioning and so on. So again, great group of folks, very experienced and very capable. In terms of the project itself, again, phase 1 is fully funded and construction ready. Brazil is an extremely mining friendly jurisdiction, 80 plus years of continuous production of graphite. really outside of China, there's not another jurisdiction that has similar sorts of production history and experience associated with it. It's very simple open pit mining. There is no drilling and blasting. It's an oxide ore deposit with that surface mineralization. So we have an extremely low strip ratio. It's a very simple proven flow sheet similar to the other mines that are in production, with one important exception that there is no tailings facility. So we'll be using dry stack tails, meaning we take the water out of the tails. You end up with a filter cake that then gets co-disposed in with your waste rock. We're ready for construction. As I mentioned, we're looking to stick shovels in the ground basically in about 45 to 60 days. There's a specific slide that speaks to the infrastructure. Again, I don't know another project that has similar sorts of infrastructure advantages like we have here. And again, very experienced management team that's capable of taking projects all the way through construction and operations. So in general, the project has been completely de-risked except for obviously execution risk. And again, that's where I think having an experienced management team comes into play. We're stepping into production in this phased approach, very small environmental footprint, low environmental risks. Will be first quartile of cost when it comes to our OpEx, extremely low capital intensity. And for countries and jurisdictions that are really looking to diversify their supply chain away from such a strong Asian dependency, I think Brazil and obviously South Star's portfolio of projects, I think is a perfect combination because we're in obvious jurisdictions, we have logistical advantages, et cetera. So we think it's a dynamite hour to have a fully permitted licensed mine ready to scale. Just real briefly through the infrastructure again, because I don't know another mine that has similar sorts of advantages that we have here. We are not spending 50, 60, 80 million dollars on infrastructure to put something in place. We're 1.3 kilometers off a multi-lane paved federal highway. We have a graded gravel road straight to our mine site that's maintained by the municipality. Power and gas are all within a couple kilometers of us. Water will be provided on site from wells. Brazil, different than most of the other jurisdictions out there that are currently producing graphite, has a large internal demand for graphite to the tune of 80 to 90,000 tons. So an easy day's drive on federal highways to most of the major industrial centers. And in terms of export, again, we're on the coast. We're close to several of the major port facilities. EDLS is 270 kilometers away, and it's going through quite an extensive upgrade on the port facility itself. Salvador, which is again a major container port, is about 500 kilometers away. And then Victoria, which again is one of the largest container ports in Brazil, is about 600 kilometers away. So it's very easy for us to get product both to internal markets as well as external markets. And I think another thing that's really important that really only producing assets in China can say, Brazil has a very experienced workforce nearby. We've got technical folks that have 30, 40 years of production experience, very capable, very dynamite guys that have been doing this forever. We also have our technical or our sales director, which has 20 plus years of experience, both in natural flake graphite as well as with synthetic graphite. His last couple of years, he's been in synthetic graphite space. So again, not a lot of jurisdictions out there can say that they have similar sorts of experienced workforce, either on the technical or on the commercial side. So very blessed from that standpoint to have a fantastic team in place. Most of our major managers are in place, and we're basically ready to go. Just real briefly about ESG. Again, because this is something we have other things in operations, we know how important it is. We also, from experience, know how quickly it can go sideways. So we take this very seriously. This is part of our corporate DNA and is something that we pay a lot of attention to. So Brazil is very blessed in the sense that 80+% of the energy comes from renewable sources. There's fantastic low-cost tax incentivized solar programs out there. Once we are in production, we are looking at some of those programs. It basically allows you to, at very reasonable interest rates, go out and put solar assist programs in place. It's pretty interesting economics, so that's something we'll be doing once we get up and running. Because we are using filtered tails, we'll be recycling the majority of our water. This is an area that was used for cattle farming and ag in general, so it's not, virgin forest or anything like that. It's been mostly disturbed. Extremely low strip ratio, so we have a small footprint. In general, all of our materials have been tested. They're inert, non-dangerous. In terms of the social programs, we've been doing this for quite a while. We have a very good methodology in place, and it's really based on being very transparent and very open and effective communication with the community. So we work hard on being present. We work hard on being very transparent. If folks, once a month, we'll have an open door policy. If folks want to come out and see what we're doing, we'll bring them out to the mine site. They can look around. And we found that the more we can be transparent, the more we can be open, have a very effective channel for communication, the better you're able to kind of not have surprises pop up. The majority of our workforce will be coming from local labor. So again, we're looking to hire the majority of our folks from the region. And we think that's good for the region as well as good for the company. In terms of governments, obviously a publicly listed company, fully audited financials. Everything is transparent in terms of how we're advancing the project and what our reports are and results are, et cetera. So it's easy for investors to understand what we're doing. A lot of our compensation is tied to ESG goals. So again, this is something that the company takes very seriously. We work hard to have a very safe, proactive, positive environment for our employees, as well as what we're doing within the community. A little bit about the markets, because this is kind of, gets a lot of folks excited. Currently, there's about 1.1 million, 1.2 million tons of graphite concentrate demand out there. That basically is going to double by 2025 and double again basically by 2030. So in effect, what that means is, 10 to 15 new mines have to come online, average size mines basically between now and 2025, and then that has to double again basically by 2030. So we feel very good about having a fully permitted licensed mine that's scalable, in play and ready to go. Again, for my money, I think graphite is a great place to be. It's number one in terms of percentage growth, and it's number two in terms of total tonnages. So when you look out across the entire suite of battery metals that are out there, again, I think graphite is an obvious choice. Recently, I think, basically until this year, there's been excess supply in the marketplace. That's no longer the case. There is a deficit in the markets. And if you look back, basically pricing is across the board really is increasing around 2% a month. Last year, it was 24, 25%. Interestingly enough, I think the fines are actually going up quicker in price compared to the large flake fraction. But regardless, across the board, the pricing is experiencing significant upward pressure. And I think that's really going to accelerate here over the next 3 to 5 years as more companies, jurisdictions, et cetera, are looking to kind of secure their supply chain. And again, I think Brazil and our portfolio of projects in Brazil and the US are fantastic places to be. Brazil is ranked number 3 in terms of critical battery metals jurisdictions, behind only China and Australia. Again, we're producing lithium, we're producing cobalt, we're producing nickel, we're producing manganese, graphite, et cetera. So this truly is a premier battery metals jurisdiction, really only behind China and Australia. And obviously for logistical advantages, I think North America and Europe are going to be looking to secure supply chain. And that's a place that I think we're really able to shine. I've been having discussions with both the DoD, the DOE, as well as the Department of State. And again, most of these jurisdictions are really looking to secure their supply chain long-term. So we think it's a fantastic time to be involved. And we obviously think our projects are very enviable because we're basically queued up and ready to go. This is a slide I really like because basically what it shows is a margin curve. And if you look at it, it's basically in the gray are projects that are producing. So these are operating assets. And in the hatch are projects that are conceptually going to be built or produced or whatever. And what it really kind of shows are the 3 most profitable mines currently in production are all in Brazil. We are right on strike from a couple of those. So again, our geologic context is very similar. One of the things that really kind of struck me about the Alabama project is just how similar it is in terms of its geologic context to what we have in Brazil. So again, I think it speaks to the testament of Brazilian graphite, and I think it's something that the markets like Brazilian graphite. They're looking for more Brazilian graphite, and I think it's a fantastic jurisdiction, particularly now when folks are looking to diversify the supply chain. It is a world-class large flake deposit. 64% is plus 80 mesh material. Talking briefly to resources and reserves, again, 15 million tons at 2.3% CG. Most of that converted over into resource, 12.3 million tons at 2.4. We'll be operating our first couple of years around a 3.2, 3.3% CG. So this is very consistent with the other Brazilian mines that are in operations. In terms of the PFS, we had $81.2 million NPV5, 35% post-tax IRR, 4-year payback from the start of construction, so 3-year from the start of production. We've recently kind of updated this with pricing as well as with our cost, so that we're fairly consistent as we kind of lead into construction. The good news is that certainly costs have gone up, but again, the good news is pricing has gone up even more. So when we recently reran this, it was kind of around 125, 128 NPV5. If we talked about an NPV8, it was around $107 million NPV8. So again, inflation is real and something to be considered, but overall the pricing has gone up more than the actual costs themselves, and we don't see anything really changing here over the short term. We were running a $12.85 average basket price and about a $400 per ton OpEx. OpEx has gone up to about $480 over the life of mine, and basically our average basket price is around $1,700 right now. So last week we announced this streaming deal with Sprott. Again, we look at this as a fantastic partnership that's going to be here for the long term. Phase 1 basically allows for a $10 million cash consideration. And then we're looking to basically start construction again, 45 to 60 days. Commercial production basically Q2 of 2023. Phase 1 is basically on up to the first 6,000 tons, plus 15% of everything over the 6,000 tons. Phase 2 then is a minimum of $9 million up to a maximum of $18 million cash consideration. That's up to us to choose what we want to take on that. And obviously that's subject to a phase 2 due diligence as well as an update for their investment committee. We have a small bridge loan involved with this just so that we don't slow things down. So this allows us basically to go out, make our down payments for equipment, finalize some land acquisitions, get contractors mobilized, etc. So basically what will happen is once we get the full CPs out of the way, then we'll basically pay that $2 million back and keep things moving forward. So we think this is a fantastic deal for shareholders. It's very minimal dilution with approximately 6 million warrants that go to Sprott on this deal. We can buy 100% of the phase 2 stream back on a sliding scale. And there's an automatic step down basically in the phase 1 stream. So once we sell and deliver 75,000 tons, it immediately gets cut in half. So overall, this is a really good deal for shareholders in the company. It allows us to have 100% of the CapEx we require for phase 1, part of the CapEx for phase 2. It overall is basically, looks at a post-stream life of mine EBITDA margin of 51%. So it provides us a ton of flexibility in how we scale this thing up and fund it moving forward, while at the same time not being overly onerous on us in the short term. It's a very compelling cost of capital compared to a lot of alternatives out there. Overall, this is around 11% cost of capital to us if it were compared to a loan, something along those lines. As we scale this thing up, we basically go from a real 17.5% stream on 5,000 tons to assuming that we buy back the phase 2 when we step down the phase 1. This basically at 25,000 tons turn into an effective stream of around 3.1%. And if we scale this thing up to 50,000 tons of con, that goes down to 2.2. So again, it provides a ton of financial flexibility for us financing moving forward. We have a very good relationship and a long-term strategic partner with Sprott. And again, we think this is a good deal for shareholders in terms of dilution and kind of how we move this thing forward. Just real briefly walk through Alabama because again, we see this as kind of the next project in the pipeline. This is something that we think we can have online basically in 3 to 4 years. We think the U.S. is a key jurisdiction, particularly for all the focus that's being driven towards energy independence and things like that. So the Biden administration recently announced the Defense Production Act. We'll see kind of how that all develops over time, but the Alabama project is a previous producer. It was active basically in the 30s and 40s. Again, it's a complementary ore body to what we have in Brazil, with it being about 2/3 fines and about 1/3 medium and larger flake fraction. Again, I think in the U.S., this is basically the only, what I believe to be the only developable belt really there for graphite. So again, we're on private tenements. We're nowhere near navigable waterways. We think from a permitting and licensing standpoint, we can get this done at the state level. So we're really excited about this. We recently signed a contract with North Carolina State to do some additional met work. They're going to take about a ton of raw ore, turn that into about 15 kilos of con. Then we'll work on testing that material for a variety of value add applications, as well as just kind of looking at chemical and physical characterization. So the belt kind of sits in here on the map. Again, we've got a good land package. Westwater is kind of down here on the southwest portion. We're up on the northeast portion. Again, I think this project, what struck me about it was really how similar it is to kind of what we have in Brazil. We look at basically taking 40 tons once we're up and running in Brazil. We'll ship the raw ore down to our pilot plant, run it through our plant. I think it's going to be almost a very similar flow sheet based on the work that's been done to date. And for shareholders, again, we've got some good partners in Hexagon and U.S. Strategic Metals, and kind of we look at this project as kind of being the next one in the pipeline in a very key jurisdiction for battery metals in general. And we think the two projects together can be very complementary, particularly as it relates to the value add component. Just a little bit about it. Again, graphitic schist, very similar to what we have in Brazil, 3 to 6% CG. What's been done to date is detailed surface mapping, a very extensive trenching program, as well as bulk sampling program, and then some bench scale met work was done at the Gear Crew lab. Just a little bit more about the geology. Again, overall, there's been 29 trenches, 2,800 linear meters of trenching itself. So in terms of what we're looking to do, basically what we'd like to do is over the next year and a half is go through, do our maiden drilling program, come up with a maiden resource estimate, get that out, work through some of the permitting and licensing, go out to some wetland delineation, basic geochemical characterization, et cetera, as well as working on some additional land and mineral rights. So we think it's a fantastic project, great partners, and really excited about moving it forward. As far as STS goes, again, extremely undervalued compared to our peer group by any metric. And I think this is mostly due to kind of, we've never been overly promotional, and we always kind of wanted to be realistic about how we develop projects. The last thing I want to do is overpromise and underdeliver. So we basically got our license in place in December 31st of 2020. We went from 4 or 5 cents all the way up to 33 cents basically at the end of 2021. Come off a little bit since then for a variety of reasons, but overall, by any metric, we're extremely undervalued compared to our peer group. Extremely low capital intensity, first quartile of OpEx. This kind of compares CapEx to IRR. And what you see are just bunches of projects which are kind of stacked up around the 20% IRR, but CapEx is $150, $250, $350 million CapEx. And a lot of that's being spent on infrastructure. They're in tough spots, they're on islands or whatever. So again, I feel very good about having in my opinion, one of the best technical projects out there with some of the best infrastructure, very low capital intensity with fantastic economic metrics associated with it. So exciting times for us. And on top of that, we're basically queued up and ready to go. So again, we will be the first new graphite production in the Americas in over a decade. Similar way of saying something similar, market cap compared to study phases. We're one of the few projects out there that's fully licensed and permitted for construction. Now we're fully financed and basically ready to kick off construction. So in terms of catalyst, again, what do we have coming up for Santa Cruz? Looking to start construction here shortly. Phase 1 commissioning and start of commercial production basically in Q2 of 23. We'll be looking to expand our resources and reserves, be able to support a much larger CapEx, particularly as it relates to the value add component. We are commissioning a value add trade-off study where we look at the options in terms of purification technologies and shaping technologies. Now, there's basically 3 ways to look at that. You can use chemicals to purify your ore. You can use temperature to purify your ore, or you can use caustics to purify it. So we're trying to put together basically CapEx and OpEx for each one of these alternatives out there, so that then I can go to the board, present some conceptual level costs associated with that, so then we can look at making a capital allocation decision on that. As I already mentioned, we are in the process of permitting phase 2 as well as phase 3 to go all the way up to 50,000 tons. All of this is planned on being modular. So again, we'll be doing, in terms of concentrate, we'll be looking at basically 25,000 ton per year con plants. In terms of the value add processes, it'll be somewhere between 15 and 20,000 ton per annum production. And then if we want to expand that, again, we're not redoing the engineering. Folks aren't relearning equipment or how we operate. It's just kind of copying and pasting and adding a similar production line right next to it. We are also negotiating quite a few different commercial agreements. Our goals are basically here over the next 90 days to have some take or pay offtake agreements announced. We put out a press release not too long ago with a company called Graphite. So again, very, very positive conversations around take or pay offtake agreements and really setting up hard commercial relationships with fixed volumes and pricing. In terms of Alabama, again, looking to get out there and drill, as well as doing a maiden resource definition, preliminary environmental characterizations, and then some additional met testing. So in general, we think we're in a fantastic position. Santa Cruz is an unbelievable project. First quartile of OpEx, extremely low capital intensity, very robust economics, large geologic upside and potential here to turn this into an extremely large project. Many of the other Brazilian operating units have been operating for 30, 40, 50 years. All right. Extremely large geologic potential and turn this into something that's really big. Brazil is an obvious jurisdiction. I think the US is an obvious jurisdiction, particularly for countries and jurisdictions looking to diversify their supply chain. It's a very mining friendly jurisdiction, very clear code as it relates to claims and things like that. So again, fantastic location. And again, I've been here since 2008, so very experienced in finding projects and working them through to operations and production. There couldn't be a better time to be involved with battery metals or graphite from my perspective. Again, I think the supply and demand curve is very clear. I think there's going to be significant upward pressure on graphite pricing over the next 3 to 5 years. This will really give us an opportunity to get in production, lock in these take or pay offtake agreements, which really are typically 5 to 7 years renewable for another period. And we've basically set ourselves up for a 1.5 decades or so of growth. So when you look out, 5 years from now, what I'd like to see is 50,000 tons of con, 15 to 20,000 tons of value add, a couple different operating units. We're diversified across jurisdictions, across product lines, across industries. So again, I think it's a very exciting time for us. In terms of the team, again, I think the management team and directors are well aligned with shareholders, very experienced group of mine builders and mine operators. Again, decades of experience of finding projects and spinning them up, And again, I think we've got an unbelievable opportunity in terms of, the right project at the right time and the right team, and really scale this thing into something large. So happy to answer any questions. Here's kind of a timetable as it relates to what we see for phase one of our Santa Cruz operations, but happy to answer any questions.
Well, thanks, Richard. That was a very thorough and insightful presentation. As Richard said, we're going to move to the Q&A portion of the webinar. And if you're interested in asking a question or logged into the Zoom app or web platform, you can submit a question right in the Q&A module. And we have had a couple of questions come in both previous and during the presentation. So why don't we just go ahead? And the first question really has to do with the Brazilian business environment regulation, et cetera. As you mentioned, you've been there since 2008. You've got a tremendous amount of experience with Brazil. So maybe if you could just elaborate on the business environment in Brazil.
Sure. And I think that's a really relevant question, right? Because you look out across kind of the ups and downs of Latin American mining in general, really any jurisdiction around the world. And there's obviously pendulum swings where it goes one way or the other. Brazil, I think, has really had a very, positive mining jurisdiction. The mining code itself is very transparent. It's one of the largest producing countries anywhere in the world, be it iron ore or others. So I think it's a very defined code that's very well understood by international markets. It's a good jurisdiction to be working in. Property claims, mining claims are all very clearly laid out in the current legislation and laws. So again, I think it's a fantastic jurisdiction. On the flip side, you see some ups and downs in Peru, Chile, and Argentina. When you think about Brazil, again, if you want to play in Latin America, I think Brazil is an obvious choice. Its economy is larger than all the rest of Latin America combined. So again, significant place. In terms of geologic exploration, I think it's a fantastic jurisdiction just because it's been so underexplored, particularly compared to Chile and Peru and some other jurisdictions out there. So I think in general, it's a fantastic jurisdiction. It is bureaucratic. You have to kind of be able to navigate your way through it. We've done this a couple of times where we've taken a project all the way from greenfields exploration all the way through to final permitting and licensing. So again, that's where I think having a very experienced management team comes into play. We've had nothing but fantastic support from the local community, the local government, the state government, as well as the federal agencies. So we don't see anything out there that really is of significant concern as we move forward. Nothing but general support across the board. And I think it's, obviously a fantastic time for battery metals in general. But I think Brazil is a fantastic jurisdiction compared to a lot of the other projects out there. We're not frozen 4 months out of the year. We're not on an island where, it's all genset power source. We think it's unbelievable in terms of the jurisdictions. It has significant logistical advantages, particularly in Europe and North America. So I think a lot of positive things line up on Santa Cruz. And we think the U.S. environment itself is also, it's a tier 1 environment. Obviously, we can move it forward, I think, from a permitting and licensing standpoint at the state level. So I think we've got a fantastic portfolio of projects out there that could be moved forward into production quickly, and really no red flags that generate a lot of concern or I think things to think about. Really, I think it's two good jurisdictions to be operating in.
Fantastic. Thanks. We are pressing up against time, but I think we got time for at least one more here. Essentially, we want to know what the carbon footprint of the project is, and maybe the timing of the startup, which I think you've addressed, but maybe just to go over that, and then what you're thinking as far as cash flow and profitability.
Sure. So in general, again, we're looking to be basically in cash flow. We'll start commissioning kind of the Q1 of next year, and looking to be in full phase 1 production Q2 of next year. Again, based on what we've seen, it'll be 8.5, 9 million, maybe 10 million per annum in terms of revenue, looking at around 50% EBITDA margins, free cash flow on to the tunes of about $1.5 million or so thereabouts. So again, I think exciting times. I think more companies don't do this approach because they can't be profitable like we are at the phase one operations. And as we scale this things up, it becomes progressively more profitable for us. So again, I think it's a fantastic test case that allows us to get product into the marketplace and establish those take or pay offtake agreements, so that as we scale this thing up, it's really only a question of how many different plant modules we need to build, as opposed to does it work, can it be used for this or for that. So again, I think it's very exciting times from that standpoint as we look to scale this thing up. What was the first question again, Will?
It was regarding carbon footprint.
Oh, carbon footprint. Yeah, great question. So that's something that we're looking at, actually calculating the numbers itself. So we haven't done it yet, but it's something we are looking at. As I mentioned, Brazil is very blessed in the sense that about 80+% of energy comes from renewable sources, be it hydroelectric, wind, or solar. There are unbelievably cost-efficient solar programs out there with significant tax benefits associated with them. So we will be looking at installing some of those solar programs once we're up and running. For example, we are using natural gas for drying on the phase one, and that's more related to CapEx and just the ease of operations as we start through the demonstration plant. But for example, for phase two and phase three, we are looking at using eucalyptus, which is a renewable energy source, very effective in terms of its cost, and in fact is being used in other operations. And that really allows us to kind of cut out one of the larger consumptions that are carbon based. So as we look through this, we have diesel associated with the fleet. But really, that's about it when it comes to carbon footprint. We have a very small mining operation, so it's not like it's, we're moving, 500 million tons on an annual basis. So overall, it should be a very small footprint. We are talking with a couple companies to calculate our carbon footprint and then come up with suggestions and recommendations on how we decrease that over time. But I think as we move through the studies, we should be actually one of the smaller footprints out there, just again, because of the opportunities that we have in Brazil, the small footprint, the opportunity to use eucalyptus for energy generation and the solar programs we have in place. So.
Perfect. Well, great. Thanks, Richard. And thanks everyone for joining us today on today's webinar. The webinar recording itself will be up and soon made available on SouthStar's website. If you have any additional questions that have not been addressed on the webinar, please feel free to email us at southstar@rbmilestone.com. Again, that's southstar@rbmilestone.com. Thanks again, and this concludes our webinar.
Thank you very much.